Well, today I had a very significant allergic reaction, and yes, my face looks a little bit like Will Smith on Hitch. Thus, I will be narrating this week's episode off camera. So thank you for your understanding, and yes, you are allowed to chuckle. Over the last decade, reverse mortgage industry participants eagerly anticipated the so-called silver tsunami of retiring baby boomers. It was seen as a potential answer to declining HECM loan volumes in the wake of the 2008 housing crisis and the subsequent exit of large bank lenders such as Wells Fargo and Bank of America. However, now another kind of silver tsunami is expected. A recent column in Newsweek notes, 3/4 of American baby boomers are likely to leave much of their $17 trillion in home equity to their children, sparking a silver tsunami. If true, then your Gen X friends stand to inherit a tidy sum of money thanks to their parents' accumulated real estate wealth. Data collected by the Federal Reserve shows that since 2000, baby boomers, those born between the years 1946 and 1964, have also enjoyed the largest share of real estate when measured by generation, a trend that has actually increased since the 2008 financial housing and great financial crisis and the passing away of the silent generation. For decades, the most common objection to a reverse mortgage for older homeowners was the desire to leave the home to their children or their heirs. Newsweek noted that the government-sponsored enterprise Freddie Mac found that 3/4, 75% of baby boomers, plan to leave their current home or the proceeds from the sale of their home to their children or family members when they pass on. That may be all well and good, but as we noted in a June episode of the Industry Leader Update, there is a big gap between older parents' expectations of how their children may benefit by inheriting the home and the reality and the complexities that come along with inheriting a home. Boomers, who already account for the majority of real estate wealth in the U.S., have seen their median home values nearly double since the first quarter of 2004. Newsweek notes the chances of a mass real estate inheritance shift happening is further improved by the high proportion of baby boomers saying they will look to other sources outside of their home to fund their retirement, such as cashing in on their savings, Social Security, retirement and investment accounts, and pensions. Only 9% of baby boomer homeowners say they plan to use their home equity or a reverse mortgage to help see them through their non-working years. And that last group is perhaps the most elusive yet valuable cohort of older homeowners for reverse mortgage lenders. Yet, many may find themselves needing additional cash flow to age in place. Freddie Mac also found that 68% of baby boomers are planning to age in place, meaning they will not be looking for a new home to live in the remainder of their retirement years. Another recent study conducted by Redfin in April 2024 found that 78% of all baby boomers plan to stay in their current home for retirement. Young families are not the only ones that are struggling to face the increasing cost of living. So are older adult children, who may face the additional need of supporting their aging parents, a group that many have called the sandwich generation. Last week, MSN recounted one story from a caller who reached out to the syndicated finance show Ramsey Solutions. Carrie from New Orleans, Louisiana, found herself in an unfortunate position as her 80-year-old mother requires assistance to manage her housing costs. She explained that her sisters have asked her to pitch in $350 a month to cover the ongoing costs that still need to be paid when you have a reverse mortgage, such as homeowners insurance, utilities, and property taxes. And it should be noted that these are typical expenses that are required for any homeowner, with the exception of homeowners insurance, which can only be mandated if there's an outstanding mortgage owed. My stepfather passed away, left her nothing, and their house is in a reverse mortgage, which is the worst, she said on a recent episode of The Ramsey Show. I'm sure they enjoyed that comment.
I deliberated with my husband. He's like, Carrie, it's a reverse mortgage. Why would we throw in money into it when your mom has options? And this was the plan anyway, because she cannot make it by herself. My mom is 80. She's in great shape. She works out twice a day. She's on no meds. She will live probably a long life. However, you know, when I went back with my sisters with the reverse mortgage and throwing money away, they were like, okay, well, what if you do it for 5 or 6 months? And my husband was still like, we can do whatever you want, Carrie, but, I don't think it's a good idea. She has ways of, living, but just not in her home. The home is falling apart. So I feel bad because I'm the daughter that said no, and now I feel a rift.
According to MSN, Carrie and her husband are struggling to pay down their own debts, not to mention the cost of raising 2 children. Now the couple faces an uncomfortable decision between keeping a roof over her mother's head or their own financial stability. Unfortunately, many middle-aged Americans now find themselves in a similar situation. According to Ramsey Solutions co-host John Deloney, feeling guilty about not chipping in is better than feeling resentful toward her mother and sisters over the long term. Older children may be unable to financially support their parents when they're struggling to make ends meet themselves. Yet, the family could have seen their mother in a much more dire situation if Carrie's mom was forced to pay a mandatory monthly mortgage payment. The question, as some seasoned reverse mortgage professionals have said, is, what was your plan B? Put simply, if mom did not have a reverse mortgage, what would her quality of life be, and would the children be able to help offset a sizable monthly shortfall in her cash flow, which would most certainly be larger if she had not got the reverse mortgage? Over the past year, members of the reverse mortgage industry have been making a more concerted effort to connect with their counterparts in the traditional or forward mortgage space, writes Chris Clow in a recent Housing Wire Reverse Mortgage Daily column. The efforts have not gone unnoticed as more forward or traditional mortgage companies, especially in a time of higher rates and declining mortgage applications, have begun to see the value in the potential addition of reverse mortgages to their product suite. While some forward lending companies have gone out of their way to acquire and then incorporate a reverse mortgage lending division into their operations, others have been bolstering their existing reverse mortgage divisions. And some reverse-only companies have now aimed to establish even firmer ties with the much larger forward or traditional mortgage industry. At this year's Mortgage Bankers Association annual convention and expo, several reverse mortgage professionals were there on hand to try to establish these firmer ties with their forward counterparts. Housing Wire's Reverse Mortgage Daily interviewed several reverse mortgage professionals who were in attendance at MBA's annual expo and convention, one being Jim Corey, Managing Director of Reverse Mortgage Lending at Guild Mortgage. Corey also serves as NORMLA's co-chair. Now, one of NORMLA's initiatives is to reach out to traditional or forward mortgage professionals. There is a new set of big forward players compared to years past, said Corey. That, I think, has grown the acceptance of talking about it. The MBA is far more interested in reverse, and it really pairs well with this mission. People are talking and want to hear more. One reverse mortgage lender who was attending was Finance of America. FAR's VP of Marketing, Ashley Smith, told RMD, "There is, I think, a market increase in interest. We had good foot traffic to our booth, our account executives had meaningful conversations, and the HomeSafe Second in particular is a product that attendees were hearing about for the first time, which really seemed to resonate." Now, the HomeSafe Second is Finance of America's proprietary reverse mortgage, which presently is the only second lien position reverse mortgage on the market today. Then Longbridge Financial made their presence known. "Our goal at the MBA is to meet with as many of these type of lenders as possible," said Adrian Prieto, Senior Vice President of Wholesale at Longbridge. Prieto noted, "The conversation can be as simple as Reverse Mortgage 101 or how their servicing portfolio could be open for opportunities with reverse mortgages. But yet there remains a dearth of reverse mortgages being represented at the MBA convention, which could be due to several factors," said Prieto. "Getting meetings with these kinds of people they want is an incredibly competitive process, but this serves as an important first step to further build these kinds of relationships."